And we're live. Content provided the advantage for general information only, not intended to provide specific advice or recommendation for any individual, and performance references historical. And there is no guarantee of future results. All indices are in management of being invested into directly in economic forecasts set forth in the event may not develop as predicted. And there can be no guarantee that any strategy will be successful. These thoughts and opinions are those of Gimbal Financial, do not represent the views of LPL Financial. Securities are offered through LPL Financial, member of FINRA and SIPC, and investment advice is offered through Gimbal Financial, a registered investment advisor and separate entity from LPL Financial.
Wow.
Good morning.
Good morning.
Did all you guys read, did everybody read that? Is that enough time for people to read? Amanda, you kind of talk as fast as Debbie does sometimes.
Sometimes. Well, when you've been working with someone for going on 6 years, that tends to happen.
And if you go on a walk with Debbie sometime, Debbie walks as fast as she talks.
Yes, she does.
Hi, Debbie.
Keep up. Well, I did, Doug, you took a webinar or seminar not too long ago, and they had 2 rules for you. And I think we break both of those rules every single week.
It's amazing what you can learn on the internet machine. I sat in on a MIT class on communication. Yeah, I mean, isn't that fun? I mean, it could have been like a Toledo Rockets university. Nothing against Toledo Rockets. I like the Toledo Rockets, but it could have been a class from anywhere. But it's impressive what you can do on the internet, and really, it just comes from a desire to learn. And a desire to learn is expanding your worldview. And that's just been one of my things since I was little. Not necessarily learning in the classroom, but a desire to learn overall just about life. I've always loved learning about life, especially capitalism. That's my favorite subject.
I wrote an article in the Gimbal February Anchor about capitalism compared to socialism. Hopefully you guys will read it and maybe give me some feedback whether you liked my analogy or not. If you don't, you can call me. If you do, post it everywhere on the internet.
My great grandma taught me about capitalism.
Your great grandma?
Yeah, great grandma Gigi. Wow. Gigi was a pioneer business lady. Gigi owned a beauty school. They operated it out of their house. It's a beautiful old house. And it was really neat because her desire was to help women with a skill set, with a trade, and have something where they could earn some money to contribute to their families. And so it was a school for that. It was a school for cosmetology. And my cousin owns it today. It's 3rd generation business. And the other unique part about Gigi's business is people would come to get their haircuts. And so you'd have students paying you tuition, and you'd have customers paying you. I mean, that is capitalism at its finest. It's unbelievable. And, you know, it was a neat thing for me to see as a kid, because I'd walk in there and there'd be optimism. Young people and optimism go together. Life is good on the way up. And so I would get to see these young people, even, you know, they were old to me. They were probably in their 20s back then. And they were bettering their lives. And they were fun and optimistic. And I loved going to Gigi's. Yeah.
I told my son Caleb a story about capitalism and the aging process at the same time over the holidays, kind of like what you said, that young people. But I said, you know, one of the capitalist entities that makes a lot of money, but also helps you realize you're getting older, is professional athletics. Like as a little kid, those guys look ancient.
Yeah, right.
And then when you turn Caleb's age at 19, they don't look so ancient anymore. And then when you get my age, is like, I didn't even know they were allowed to leave the house at that age.
Yeah, no, that's a good word.
Yeah. Well, what do you need to know, Amanda? What do you got for us?
Not that much. I hope our compliance will allow us to get away with what our disclosures were. I didn't read all of them. If you could tell, we had a few more on there. I can
assure you, eventually our compliance is going to see things in a better way. I think that's true.
I'm just going to put this up. I totally agree with you. I'm optimistic. I'm so optimistic.
Yeah.
I can also assure you that there's plenty of time to read this stuff. And that was rule number 1 of the MIT guys' presentations. Don't read this stuff. Your people know how to read. Let them read.
There's also a pause button that can hold that on the screen longer for you to read it. So,
well,
it'd be better looking than staring at me and Keith.
Compliance people have a job to do, and a lot of it has to do with their interpretation. And sometimes they can change their interpretation to be more menial to their customers, and sometimes not. And that's just part of it. But I think one thing I would like to just throw out there really quickly is the COVID tracker. I don't know if you looked at that, Amanda. If not, I can cover it real quickly. I've got it on my screen. Will
you explain where this comes from real quick, Keith?
Yeah, this COVID tracker is from a company called First Trust Investments. They've been tracking the data, not the emotions of this, really from the get-go. They took a breather last summer when this is a picture of how the COVID has gone. And when it dipped real low here last summer, they stopped doing it. And then when Delta picked up, they started doing it again. And you can see this blue line is the daily positive tests. And I don't know that even this data over here is true, because I don't even think they had tests as early as May of 2020. They might have, but not.
That's interesting.
Yeah. And so the tests, the blue line should have probably been closer to up here if they were able to test it back then. But you can see how this Omicron has peaked out, and it appears that it's probably heading downward. But what I wanted to point out, there was a couple things that were intriguing to me, and I don't, I had a physical this week, my annual physical, and my doctor, I asked him his opinion on some of these things, and I appreciated his input. He tried to present it to me in a non-political, non-emotional way, but I thought this corner up here was really interesting. So this was published the 24th. The CDC announced last Wednesday that data from 1.1 million COVID-19 cases in California and New York last year showed prior COVID-19 infection offered better protection than the vaccination during the Delta variant wave. And I'm going to probably do a little more research on that, because the Delta, I think, has been the really kind of the rough one. But I think if that data is what it is, that's a pretty comforting thing to those of us who got hit with the Omicron here in the last few days or weeks. And so that should give you some encouragement. And then this bottom one of the two pictures of the United States here, the left-hand map shows state-mandated mask policies for schools, and the right shows estimated percent of the population ever affected with COVID-19. And so these dark blue ones are places that have mask mandates, okay? And over here on this one, these are the people that have been impacted by COVID. And so at a first glance, what caught my eye were these two states here, Oregon and Washington, that they had a heavy mask mandate, and they had a lower evidence of COVID impact on them. So if you looked at just those two, you would say, hey, wait a minute, maybe I should be wearing a mask. But then if you just go directly south of there to California, where they had a mask mandate, and you go over here to Indiana, where there was local discretion, basically, I think they did have some mask mandates there, but there really is no difference in the outcome. And so when I looked at this data, it suggests to me there's no correlation between the mask and the actual impact of
New Mexico.
Yeah, New Mexico, or even if you look at Illinois here, there's no real difference between Illinois and Indiana or those surrounding states. So the mask, in my opinion, looking at this data, appear to have no correlation between whether or not somebody gets the COVID.
Florida, right? Yeah, interesting.
Yeah, so that's nothing political. It's just me looking at the data and offering an opinion on that. We can always get you a copy of this thing to study for yourself, or you can go on their website and take a look at it. But I just found that interesting this week, and I had COVID earlier in the month and have bounced back fine. I've got friends that have had it this month and haven't bounced back so quickly. So I appreciate the kind of the thoughts of COVID, and our hearts and prayers go out to those people that have had more difficult battles with it than myself.
Yeah, that's a good word.
Well, want to want to talk about the stock market?
Let's talk about COVID some more.
I'm going to share my screen again. I've been doing this with y'all for a few weeks or months now, but this is our data from our database. It shows that we have, back in August, in our database that we screened companies, almost 9,000, 8,950 back in August, and today there's 9,468. And the 200-day moving average is close to a year. The average price of a stock, it builds a little graph across it. The 50-day is the last couple months or so, and it's a shorter term. And then the 21 days, just this month, what's happened this month or so. There's basically 21 business days in a month, and that's kind of what that is. And so what I highlighted here originally in the yellow was when one of those started getting to the 50% of the total number. And we had been talking about, I think probably since we first saw this yellow here, the market was a little sketchy out there. And then we started seeing the yellow show up more, that we got above the 50%. And then last week, they all hit new highs, and they were all above 50%. And you can see we hit new highs on all of them again this week. That particularly the one that caught my attention is the 200-day moving average. That 2/3 of the companies traded publicly on our tracking software are now trading below the 200-day moving average, and that's just a warning signal to be cautious out there. I think it's safe to say we think this market is very challenging and warrants caution.
Yeah, I would say so too. And I'm always thinking about just the local business person. I don't know what the top pizza place is these days. We have our biases, but if we all owned a pizza restaurant together, we'd have times where it would just be cranking and things would be going good. We'd be expanding, we'd be hiring new people. We might even increase our technology or maybe upgrade the tables and chairs with profits that we've been making. Then we'd also have times where it wouldn't be looking so good, and we might have to write checks for the ingredients that come in the door. And so business trends, and it's the same way with the stock market. As you know, it's just been a while since we've had a pullback like this. I mean, we've had a couple, like one in 2020, March 2020, that's obvious one. And then one that was not so obvious was late 2018. And the market really slid. And most folks didn't even know it because their quarterly statements came out, saw a low number in December. And then by the end of January, end of their quarterly in March, things look pretty good again. And so it helps to zoom out and zoom in. But when you can take the emotions out and just say, hey, what's the data telling me? Should we wait on those new chairs and tables? Should we wait on hiring that new delivery person or upgrading our fuel reimbursement policies? It's just business. And so we're just, as one of our friends likes to say, we're just getting in line with what is on the stock market.
I think it's important to realize as well that the stock market is a leading indicator of the economy. So the economy does not predict the stock market. The stock market predicts the economy. And so
probably 6 months out at least.
Yeah. And so and individual stocks have that same way of doing that. We pointed out over the last few weeks some stocks that have had significant drops. There's a 50-80 rule that 50% of the leaders in a bull market are going to drop 80%, and 80% of the leaders are going to drop 50%. So those stocks, when they begin trending downward, it probably suggests that they're starting to see fewer sales of their pizza. They're starting to see less people coming in the door, and the market anticipates that and projects it out in the stock price.
In the indice, like we talked about, the S&P 500 or the NASDAQ, that's just a collection of stocks.
Right.
And so when we talk about some of those specific stocks that are starting to move a different direction than they have in the past, that indicates what an indice might be doing too.
Now let's take a look at the let's take a look at a couple of these. And this is the one that's really been taken out and slapped around the most, the NASDAQ. And these are growth-oriented companies. If you want to generalize what's in this one, there's growth-oriented companies in the S&P 500 as well. But this back in the day, if you were bringing a company public, you would bring it through the NASDAQ because they would have lower standards, so you could be more of an aggressive company coming to the market through the NASDAQ. Over the years, the listing, Microsoft never went to the New York Stock Exchange. They just went to the NASDAQ, and Google, I think, did the same thing. So it's not as much of a second-rate citizen to be a NASDAQ stock as it was many years ago. But let's just draw some lines here and kind of show you some things that are going on. Like we've talked about, that when a company or an index drops below this red line, the 50-day moving average, it's probably worth paying a little bit of attention to that. And not only paying attention to it, but how it responded to it. Like this number is kind of in the way here. I don't know how to get rid of that number, but right there, it came down right above that 14, above the 78 there. You can see the red line where it bounced off of the red line and came back up. It acted like a trampoline, and it closed that day near the top. And so paying attention at the 50-day, like some of these times where it's kind of bounced through, can give you an indication. And what happened here is it did the exact opposite. It started free falling through it. And then the next place that you want to check things is right here at the 200-day moving average and see if it can support that or not. And it bounced off of it the first try back in January, and then the second time we've just not seen quite the success that it had before.
Those vertical lines that you're seeing, that's the price action between the open and the close. Now that's what happened that day. And when Keith and I see a longer line or a long line, that's not ideal. That tells us that there's no real conviction in price that day or in that season. You can see here recently the lines are a little longer, and we like to see the lines, the vertical lines, be short. And that tells us that they're tightening up, and buyers and sellers are agreeing, hey, this is a good price for this. But right now, the lines have been very long, and that's just another form of disagreement on price.
Yeah, one of the research people that we really appreciate his input, kind of consider him a friend, his name's Patrick. And what Patrick says, so you see over here where I drew the arrow, these lines are pretty short. The statistical term for those lines is the range of the day, the high and the low, and that's the range. And then the little cap at the top of those or at the bottom is where the stock price closed at the day. And so you can see when things were going up here, the range was pretty tight and small. And what Patrick says is that when you start getting these long lines, it basically shows there's a lot of emotion in the stock market. And when it starts getting emotional, you can see, like this day right here, it's a long line, and over here it was a long line. When it peaked, it was a long line, and then just that's all we've seen here this last 3 or 4 weeks since the beginning of the year are long lines. And so all that tells you is maybe I should get in line with what's going on rather than what I wish was going on.
I do my morning Friday show review over at Panera a lot of times, and that's not a stock recommendation, by the way. That's maybe a breakfast recommendation. But at Panera, it's funny. I overhear stock conversations, and the conversation behind the booth today was, now's the time to buy. It's low. and Keith and I, we talk about this all the time, but if you buy something, it can always be reduced 10, 20, 50%, no matter what price you're buying it. I mean, it can be reduced. And so if those lines, those vertical lines, the range Keith was talking about, they start to tighten up and start to move north towards the black line, the 200-day average, then, we might start becoming a little more optimistic.
I was, Eric introduced me to some new technology called Grammarly yesterday, and he wanted me to type to see if it correct my lack of typing skills and grammar skills. And as I just started typing an article, and then I woke up this morning motivated to finish it. And the idea was this: if I start with $100,000 and my account drops 10% consecutive days, which would cause me great stomach pains, but it would be 23 days before I dropped to 10% to $10,000. I started at 100. I could have 10% drops before I get to 10% of my original amount.
Yeah.
And then to get down to 1,000, or to get down to 10,000 of the 100,000, to get down to 1,000 from the 100,000, I could have 45 10% drops.
It takes courage to sell.
Yeah. And so the math gets really weird, and that's what I was writing about. And is that well, let's just finish this chart here. Suppose I don't know anything and I just want to follow this chart and see what people are doing. I can go down here to the bottom, and this is the volume of what's going on, who's getting in or out of the market, and the pinkish red or whatever, magenta, I don't know what color that is those are down days, and the blue are up days. Well, if you just looked at this, it'd say this would probably be a good time to be in there. And when it starts getting solid, more red over here, you say, it looks a little more challenging over there. And you need buyers stepping into it. But just look at these down days. So that one right there closed near the bottom of the range of the day. That one closed right at the bottom. This 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 one closed. And so if I were a trying to get a pattern, if I was trying to say, what is the pattern going on here? If I were going to buy a stock, if I were one of your friends at Panera, I definitely would wait till the end of the day, at least, to see what's going on at the end of the day, because you had some end of the day things. You had them there, and you had them here, and you had them here. And then this one, we had a really volatile, was that Tuesday? But the end of the days have not looked very encouraging on those things.
And even if we were to zoom out, I mean, there's been a lot of buy and hold action over the years. And so there's a lot of profits people still have. And those people who still have profits, they're thinking, okay, when do I exit this thing? Or if they have losses, how much more can I take? So this is the mindset, the battle between the years. And we, just like the COVID tracker, we really, I mean, Keith and I, we battle these things too, but we try and put data to it to help us make decisions. Yeah,
and I'd say what's going to happen for us to be like smiling and say buy next Friday is one of the things that has to happen is, see, this was a low right here. This blue line right here was a low. And then guess what happened? We had a lower low right there. And then we had a lower low right there. Well, we have a low right here. And what we need to see happen is it not to go lower than that.
Yeah.
And so,
and we're pretty optimistic about the future, by the way. I know this sounds pretty pessimistic, but we are pretty optimistic. There are new innovations in supply and goods and services happening, and we can't wait for all of us to take part in that.
Yeah. So once it quits having lower lows, which is just a graphic description there. There's no guarantees in any of this, but it's generally hard to hit a new high without hitting new lows. So
profound.
Yeah, that's Murray State, baby. So that I don't think we're at all pessimistic. We're just cautious right now. And I think if I look out the window and it's snowing out there, I'm probably not going to peel out of the office at top speed. The roads are a little icy. I'm going to be a little cautious out there.
Yeah, that's good.
All right. What else you got, Doug?
Well, I think that pretty much sums up the market. I had a couple other thoughts in looking at the S&P or the smaller companies, but it's kind of the same story. We've got disagreement on what people should pay and what people should sell. And the lines are long on really anything we look at, right? I mean, Keith combed through 1,000 stocks last weekend. That's how you have a good time on a weekend, by the way.
Come hang out with me.
And there was really not much that you saw, right? And so it doesn't matter what we put on the screen today, it kind of all looks the same.
I'd say you could throw oil stocks out there.
Oil stocks, maybe a couple commodity stocks.
Yeah.
Those actually look pretty good.
Those usually don't peak simultaneously with the rest of the market.
Right.
when those things are peaking, it says there's probably some fault lines in the ice you're getting ready to walk on. So yeah.
I've got some curiosities about inflation. Inflation is just it's a hot topic right now. When I go back to the time period that I was born, that's when all the inflation talk that I hear about in coffee shops really ramped up, or when I hear my dad talk about the first mortgage that he had, but in 1980, the borrowing rate between banks had really shot up. And will it do that again? We have no clue. I mean, the representatives, the feds met this week and really didn't do a whole lot. I think they kicked the can down the road. So we'll probably see some hikes coming, either later this year or definitely into 2023. But again, innovation and the desire to create and make things more efficient and better for life, that's what's going to win out. And I read this quote by C.S. Lewis, and I just really like this quote. The home is the ultimate career. All other careers exist for one purpose, and that is to support the ultimate career. And so this is why people innovate. This is why they go to work. This is why they do things better than they did the day before or the year before. It's just to make their life better and to make their home life better. And so you're always your best investment. And so just like we talked about earlier, just the desire to learn, to see, hey, how did grandma do it? Maybe grandma didn't do it right and you want to do it the opposite way. But the desire to learn, that's what's going to make your life just great.
I had the treat of meeting with a third generation client yesterday who was 18 years old and just a delight. And it took me back down memory lane to my first time with grandma. And also it took me back to the last time I got to see grandma was right before COVID broke out. And to imagine all the conversations I had with grandma, and then to see she had saved money for this grandchild, and just to be able to be one kind of a go-between to imagine what I heard grandma wanted to do and then see it being manifest through her granddaughter there. It's just a really cool thing. But it goes right back to what you said, Lewis said, is that's the ultimate thing. Like grandma, near the end of her life, the main thing she was thinking about was her family. It wasn't thinking about building a bigger and bigger castle or silo. Yeah.
We hear it all the time when we listen to your beneficiaries.
I have one last thing I think I'll throw out there to you all. Eric and I had lunch with a CPA this week, and we were asking a variety of questions. And one of the things that he said, and so this is what my message to you is, to relax. Okay, just relax. And what he told us was the IRS has been sending out notice that this will be an ugly tax year. And they have semi-trailers full of stuff they haven't processed from last tax year. So I would suggest to you not to be anxious about getting your taxes done. Don't worry about being the first one getting them done. Don't get overly excited if you haven't heard back from a response to the IRS. If you had to respond to something, it's sitting in a semi-trailer. The people are working remotely, and I don't know if anybody even opens a semi-trailer. So don't stress yourself out. Relax during the tax season. It's not you, it's them.
So you're saying it's going to be like the Wendy's drive-thru, not picking on Wendy's, but like a typical fast food drive-thru right now. Maybe they don't have the bandwidth to get it done.
Right now, I want to give a sales pitch for the Chick-fil-A drive-thru. Those guys know how to get it done. Maybe they can work with our IRS and help them think through it. It's not publicly traded, by the way.
That's right.
You guys have a spectacular weekend. We'll love to see you soon.